Coming up on Business Incorporated. Kenya Airways drops 2 more aircrafts as part of cost-cutting plan. And net foreign direct investment inflows rose by 71.4% to hit about $8.9 billion in Egypt. Plus, stock futures fall after the Nasdaq Composite closes at a 2-year low. Hello and welcome to the program. I'm Ladi Williams. First off, let's take a look at how your money is performing at intraday. Starting in Africa now, we see the NGX is the lone gainer at intraday. Looking good, might give us a fresh opening to rise this week. Talking about the NGX there, 0.57%, and I saw stocks like Boa Cement in the green. That could be lifting the market, but fingers crossed on the close for today. South Africa's GSE there, 64,253 points. That's down 0.80%. We flip over to other parts. We see Egypt there, North Africa, that's down 0.46%. Was also negative at intraday yesterday. And we see Kenya closed again 2.18% up yesterday after closing the same by the same margin on Friday. Let's flip over to the Middle Eastern markets now. We see the Abu Dhabi index there, that's up down 0.55% at 3,320 points. We see the Dubai index there, that's also down 0.66%. We'll flip over to other parts in the Middle East there. We see Saudi Arabia, that's also down 0.28%. And the Qatari index, not left out there, it's also down 1.23%. We're seeing a bigger loss there for the Qatari index. Let's head on to Europe now. We see overnight stays in Germany surpassed pre-pandemic levels. That's what we talked about yesterday. But there is a surprise uptick in bankruptcy levels in Germany, and the number of insolvency proceedings in September rising by a third compared to a year earlier. A new report suggests the numbers are likely to keep going up. Let's bring in Stephen Beardsley now to bring us up to speed. Great to have you, Stephen. So is Germany facing a wave of, it looks like it's a wave of bankruptcies, but why is this happening?
Yeah, the short answer is no, that doesn't seem to be the case. What this report seems to show, and these numbers are bracing at first, and you can picture why people would be concerned when they hear this, but basically shows that in September there was a third again as many bankruptcies compared to the prior September in 2021, and that this, according to this report, the trend is likely to go upwards in the coming months. That is, there's more likely to be more bankruptcies compared to the previous year. In November, as many as 40% more than the prior November. Now, the reason for this, the report posits, is that it's really based more on a return to normalcy after several years of the corona pandemic. That was a time in which insolvencies actually went down. Now, that may sound a little paradoxical because many businesses were under considerable pressure during the pandemic, but there was a great deal of financial assistance going to individuals and to businesses during that time, and that helped many of them stay afloat. But again, you can understand why people look at this figure and they are concerned because Europe, and especially Germany, does seem to be on the precipice of a very difficult winter when it comes to energy costs, inflation, and recession.
And talking about energy prices, they're soaring across Europe. Are more businesses likely to be on the brink this winter?
That is the expectation. Right now in Germany, there's discussion about how the government is going to cap energy prices and gas prices altogether for businesses. And industry groups who are really pushing for this cap and for as much help as possible are saying, look, this is an existential question for many of our businesses. Now, that is true to some extent when you look at those that are heavily reliant on gas. For example, in the steel industry, the chemical industry, they are getting less gas. They're getting no gas, I should say, from Russia right now, almost no gas. And what they're getting from wholesalers is what's been purchased on the spot market at much higher prices. So they're paying much more. And then there's no guarantee that supply is going to come at the same rate throughout this winter. So it is an existential crisis, and it's a crisis for many of their production lines and for many employees who are working on those lines. But for many other businesses, it is going to be a considerable cost when electricity prices rise and gas prices rise for their heating, for example, as temperatures get colder. But it may not be the immediate existential crisis that it is for some businesses. What it does mean, though, in the middle to long run is that if these businesses are going to cover those higher costs through their own, if they're going to cover those costs, I should say, they're going to spend money that they could have allocated in other ways better, that is for investment. So if they're not investing in the same technology and the same sides of their business that they would have otherwise, and they're going to have a competitive disadvantage, not to mention just by the fact that they're shelling out more for energy costs. So this is the concern in the long term and in the middle term, and this is why you're likely to see a much more generous package of help from the government here.
Yeah, so much support needed for those businesses. But how are the markets looking?
Financial markets we're seeing exactly what we saw for the past 4 days with financial markets, and that means that they're all going down at this rate across Europe. They're all opening down, and that's because of worries over growth for the most part. That's persisting, but also what we're seeing in the UK right now, and that is the Bank of England once again intervening and expanding its bond purchasing program to cover inflation-linked bonds as it tries to stabilize markets there. That discontent amongst investors in the UK is potentially spreading elsewhere to other markets, and it's adding to that downward pressure because of concerns over growth. So we're seeing all major European markets starting out in negative territory today. The FTSE 100 in London among them, CAC 40 in Paris, DAX as well. Also, we're seeing new fears amongst investors over potentially rising COVID cases in China and what that can mean for the global markets in the long term as well. So the sentiment not too positive today.
Yeah, not so positive. Thank you so much, Stephen Bedsey, with the details right there from Berlin. Let's move into other stories now. Heading on to London. We see Jamie Dimon's recession warnings in the U.S. still making headlines. Let's see what's happening in the UK now with Juliana. Great to have you, Juliana. So it's all about the recession fears right now, the world's biggest economy. How are investors and analysts chewing on this warning over there?
Good afternoon, Laddie. Well, as you said, you can imagine there's so much domestic volatility in the UK. Lots of the business pages haven't really covered Jamie Dimmon's speech, but however, of course, he is the CEO of America's biggest bank, and he is talking about the world's largest economy. So it is sending some shockwaves and fears. And I suppose one of the reasons why it has rattled investors so much is because if you look at America right now, it seems to be doing pretty much okay. I think consumers are spending 10% more this year than they were last year. Inflation isn't as high there as it is in other places across the world, although it is, of course, at a 40-year high. In the UK, we already have hit double digits. But the issue is that some of the things that are rocking markets in America are not domestic issues. These are global issues. And the number one issue is the war between Russia and Ukraine and how that is spreading out. Also, as well, raising interest rates consistently. They've already been risen 5 times this year. How much further do they have to go? So there are some fears and some sentiment, but of course Liz Truss and Britain have their own economic woes that we have to face before we start looking across the pond to America. But certainly it is quite troubling.
Yeah, the UK, you do have your own problems right there, but our report shows people are buying up air fryers and blankets. Why is that?
Yeah, that's quite interesting, actually. I don't know if you're on TikTok, Laddie. I haven't seen you on TikTok. I do try to go on TikTok, though I'm just not cool or young enough.
Yeah.
But if you are on TikTok, then you would know that air fryers are a big deal. Everyone appears to be using them. You can make anything with them. And it used to be a trend, but now, because we are facing a very, very difficult winter, people aren't just buying air fryers to be cool. They're purchasing them because they're energy efficient. And at this time, lots of consumers in the United Kingdom are looking for energy efficient appliances so that they are spending less at the end of the month, because of course we are going through a cost of living crisis. Energy bills are skyrocketing high, even though Liz Truss is giving us that £2,500 a year guarantee. That is still a lot of money for individuals. So the British Retail Consortium They have been looking at all types of data, and they have found that air fryers as well as electric blankets are becoming particularly popular products for consumers that want to do as much as they can to bring down their energy bills. Now, I have just got off a plane, and I can tell you it is very, very cold in the United Kingdom. And so an electric blanket could be a great alternative to trying to put your heating up. And according to the BRC, that's exactly what people are doing.
Yeah, time to cut costs, but I hope the prices of air fryers and electric blankets don't skyrocket, you know, from this. Well, how are the markets looking?
Not great, as you were just discussing in Berlin. I think even though the Bank of England have tried to settle the market volatility by expanding their bond buying programme, or their government bond debt programme, it hasn't really. Investors are still not very satisfied that all is OK with Liz Truss's government and their economic plans. They've just convened today. They had a cabinet meeting early this morning, and they are going to meet again at the House of Commons to discuss the state of the British economy. And I think until we get some firm footing by Kwasi Kwarteng and the Office for Budget Responsibility, this market volatility is likely to proceed in the short term at the very least. So the FTSE All-Share at intraday is down by 1.17%. FTSE 100 is down too by 1.12%. And the FTSE 250, that's down by 0.90%. In the currencies market, at the moment, £1 British will buy you $1.10. It's currently lower against the dollar. The British pound is also currently trading down against the euro by 0.08% and down against the Japanese yen by 0.10%, Laddie.
Yeah, I guess all eyes still on the pound at this time. Thank you so much, Juliana.
Thank you.
All right, now, let's see what's happening in Asia. There we see shares in Asia Pacific were mixed today, while Taiwan's benchmark index fell by 4.35% to 13,106 points on its return to trade after the holiday, as investors weighed the impact of new U.S. rules on chip maker TSMC. Japan and South Korea's markets also resumed trading after a holiday on Monday. The Nikkei 225 fell 2.64% right there behind me, and we see it's closed at 26,401 points, and the Topix index lost about 1.86% to 1,871 points. And we see the HSI there, 16,832 points, down 2.23%. The Kospi also down 1.83%. So we're seeing volatility across all these markets. Now, Hong Kong's Hang Seng index also fell 2%, the final hour of trade. And the Hang Seng Tech Index dropped 3.16%. So it's volatility we see in most of these markets. Now, let's head on to the U.S. Now, we see U.S. stock futures also down today after the Nasdaq Composite closed its lowest in 2 years during the regular session. And Dow Jones Industrial Average, their futures, we see that's down 0.78%. The S&P 500 futures also down 0.89%. And Nasdaq, their tech-heavy Nasdaq, 10,890 points, down 0.84%. So we're seeing all the volatility there playing into these markets. All eyes on the CPI, PPI data coming out. That's Thursday. We'll see how the markets actually react to that. Let's see what's happening with oil now. We see oil prices slid today, extending losses of nearly 2% in the previous session as recession fears and a flare-up in COVID-19 cases in China raised concern over global demand. Brent crude fell about $2.11 to $94 a barrel, while the U.S. West Texas Intermediate crudes dropped about $2.27. It's closed at $88.86. Those worries aside, fears of a further hit to demand in China also weighed. Authorities have stepped up coronavirus testing in Shanghai and other large cities as COVID-19 infections rise again. And gold prices were subdued today by a stronger dollar and elevated bond yields as investors remained on the sidelines ahead of the U.S. inflation data later this week that could offer more clarity on the U.S. rate hike path. Spot gold eased 0.2% to $1,664 per ounce after earlier touching its lowest since October 3rd. U.S. gold futures slipped 0.2% to $1,672.50. And silver fell 1.6% to $19.33 per ounce. And platinum lost 1.1% to $888.73. Palladium, that was closed there at $888. Meanwhile, it rose by 0.7% to close at $2,187. Prices of palladium used in emission controlling devices in cars, along with platinum, have risen about 15% so far this year. And we're going to break now. When we come back, commodities market update is next. Do stay with us. This is Business Incorporated. Welcome back now to our next conversation. We see the price of sardines has skyrocketed. In 2010, a can of sardine was priced between 120 naira and 150 naira. Today, a can of sardine costs roughly 600 to 700 naira, with some stores charging as much as 800 naira per can, and is gradually approaching the 1,000 naira mark. Well, let's bring in Victoria Momo now. Tell us what's going on. Great to have you. Yeah, so that 1,000 naira mark, it doesn't look good. It looks like a lot of people are gonna, or I'm sure they've already stopped buying sardines at this point.
Yes. So sardines are, long consumed and, cherished as a major, source of nutrients, and it's like the favorite breakfast menu for many Nigerian families. You understand, irrespective of the status, and it can be eaten as a quick snack. A vast majority of Nigerians could actually afford a can of sardine, but today the sardines are in between unaffordable and expensive for many Nigerians. Many Nigerians across the socio-economic classes, and this is due to the price hike of the commodity. And this has, kept it off the tables of many Nigerian families. A major reason for the hike of this sardine is foreign exchange scarcity, which has triggered the depreciation of Naira by, about 32% year to date. Nigeria is the largest importer of sardines, from countries like Morocco and Indonesia. So the inability of manufacturers to access foreign exchange, from the official market to purchase this commodity, has made them to turn to the parallel market, which is quite expensive, you understand, to get the commodity. And this increase in cost is being transferred to consumer in terms of high prices, in addition to other rising costs of the importers, such as the import duty, cost of haulages, which have all filtered into the price of sardine. And many Nigerians have actually found a way, to deal with the price hike of sardines, by cutting down the quantities that they consume, switching to other cheaper brands, and even going as far as opting for dried fish or smoked fish, as a replacement for sardine as a protein to their regular diet.
Yeah, it's been a while. I had sardines. I know I normally like it in my salad, but I've not had that in a while now. But we have a large array of fishes, of the species, fish species in Nigeria. We have water, everywhere. Why don't we, produce this particular species in Nigeria?
Okay, so Nigeria has the environment that supports the farming of different species of fish, including sardines. But ideally, importation of this fish is not even supposed to happen in the first place, and considering the fact that we have these resources and potential of our fish industry to meet the demand of sardines. On the other hand, the aquaculture industry is actually growing, has grown over the years, but then there are technical immaturity and limitations to the species of fish that are being produced. And the country is struggling to, diversify the species of fish being produced, and this has triggered the importation of sardines into the country. And this importation of sardines is actually denting the country's country's foreign exchange.
Right, and I know Morocco, they are one of the biggest exporters of canned sardines, notably the Titus brand. What can we learn from them?
Okay, so aside the fact that Morocco has a very, massive fish resource, including other, factors and other coastal regions that would enable the production of fish, particularly the sardine, Titus sardine. They also have openness to international markets that give them this competitive edge. In addition to that, there are um, extensive fishery production capacity and also the good production reputation they have of the famous Titus sardine, as well as other good policies that are being initiated by the government of the country to boost aquaculture. So some take home for Nigeria in that regard is that we have to adopt policies in order to boost the aquaculture, specifically species diversification, so we don't import all of those commodities into the country. In addition to that, we should also mitigate, the level of pollution in the regions across the country. For example, the Niger Delta area is known to battle with the lingering issue of, oil spillage and pollution, and that is not like a favorable environment for fishes to thrive and other aquatic life in general. Also, the country should invest in sardine production, with the view of expanding the production capacity in order to meet the high demand for sardines in the country, so that we can actually save more foreign exchange and earn more revenue, especially now that the country is facing a revenue crunch.
Yeah, I guess another one added to the list of things we need to stop importing. Thank you so much, Victoria Momo, Research Analyst, Financial Derivatives Company.
Thank you very much for having me, Lad.
All right, now, so we're talking sardines there. Let's move on to other stories now. Well, Kenya Airways has reduced its fleet by 2 more planes as part of cost-cutting measures seeking to steady the loss-making airline. Latest data shows that the national carrier's fleet size narrowed in the last 9 months to 41 aircraft from 43 in December, and that's 2021, after 2 leased Embraer 190 aircraft were surrendered following expiry of lease. The 41 aircraft, 18 are owned, financed by the airline itself, while 23 are on lease arrangements. The Kenya government is pushing for restructuring of the airline on the back of a multi-million-dollar bailout plan, where the struggling airline is required to reduce its network, operate a smaller fleet, and possibly reduce its workforce. Kenya Airways has focused on restructuring its fleet, including selling aircraft and subleasing to other airlines in an attempt to return to profitability. And Egypt's economy, net foreign direct investment inflows rose by 71.4% to hit about $8.9 billion during last fiscal year of 2021 and 2022, compared to the same period of the period in 2021 and 2022. This is the highest increase to be recorded in 10 years, according to reports submitted by the General Authority for Investment and Free Zones. The data released by the Central Bank of Egypt shows that such an increase in FDI flows is attributed to the upsurge in investments in the non-petroleum sectors, which registered about $11.6 billion, with an increase rate of 81.3% if compared to the previous year. And they also point to relentless efforts exerted by GAFI in luring more foreign investment to the targeted sectors. And Zimbabwe's banned the import of Tiger Brands Limited baby powder products a month after the South African company recalled some of the items because they may have been tainted by asbestos. According to the Health Ministry, given that the significant number of products in their supermarkets are sourced from South Africa, there is a possibility that some batches of the baby powder in question are in Zimbabwe, and products should be removed from the shelves or intercepted at point of entry. Tiger Brands said September 7th it was withdrawing some of its baby powder products after trace levels of asbestos were detected in the samples of raw materials used in manufacturing the product. And the Ghanaian cedi has lost 72% of its value against the US dollar since the start of the year. The USD GHS was trading around $1 to 10 cedis. This is indicative of a 45% decline within 6 months. Despite Ghana's central banks raising its interest rate to a record high of 24.5% in an effort to reduce inflation and strengthen the cedi, the currency has continued to fall. This implies that corporate operating expenses, particularly those related to manufacturing, will grow, which will lead to increases in some market goods pricing and ultimately inflation. Ghana is battling debt, 20-year high inflation, a weak currency, and rising inequality. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. See you again tomorrow.